Assalamu alaikum, everyone. I hope you are doing well. A pretty flat day in the market, but with a smidge of green. The indices are all up today, less than 1%, basically. All of them are. The indice that has done the best so far is the Dow Jones, up 0.62%, with the worst indice being the NASDAQ, up 0.24%. The VIX is down 2.5%, and the yield on treasuries is down. The 10-year treasury is down 1%. So we got some economic data today. We'll talk about that. We'll also talk about a very distinct trend and what that means for our investments. Looking at some individual positions, Mr. is up, MicroStrategy that is up 3.5%. Tesla is basically flat. BitDeer and Iris Energy are basically flat. Gold is flat, 3,300. Bitcoin is just north of 95,000. So we got a decent recovery compared to yesterday. Solana is at 150 and Doge is at 18 cents. So let's talk about today's investing idea. You can see a robot here holding some money with the title worthless below. So what could I possibly mean by this? So let's talk about this. So first, as I mentioned, the economic news or data that we got today, job openings, is at 7.2 million versus 7.5 million estimate. So we came in, 300,000 jobs short of the estimate. Consumer confidence is at 86 versus 88. The economy is clearly cooling. Now, if we were at 0% interest rates after the economic data that we got today, you would expect markets to tank. But the reason why I think there's a floor under the market at this particular point in time is because we have a lot of ammunition in terms of monetary policy. There's a lot that we can cut. And so the hopes for interest rate cuts are what is keeping a floor under the market right now and causing data like what we saw today, and preventing data like what we saw today from causing market capitulation. And it helps that inflation seems to be cooling down. So the Fed obviously would be in a much tougher position, would be much more difficult for it to cut rates if inflation was also heating up. But inflation does seem to be coming down. The Trueflation Index puts it at 1.5%, which is lower than the Fed's target rate. And if you've been following the Trueflation Index, you know that it has served as a pretty good leading indicator for what this CPI report will show later on. And so Trueflation, I feel, is a much better real-time indicator of where real inflation is at compared with what the Fed uses, which is typically a month late. So Trueflation is showing us some good news on the inflation front. We are getting an economic slowdown. Historically, at least if you look at the last 5 years, we're at elevated levels for interest rates. All of this is a good recipe for the Fed to start cutting rates. Now, if you look at the probability for a May cut, that probability is very low. Still, these numbers were taken after the most recent economic data. So the market is assigning a 7% chance of a rate cut in May. You have to go out to June to get an above 50% chance of a rate cut. But still, I mean, we're at the end of April, so June is only a month away. And as I said, I think that is something that is putting a floor under the market and preventing us from going south in a big way. Obviously, if we get uh, some wins here in terms of trade deals with major economies, that would definitely help the market out. The two headlines that I saw that I'm going to show you are actually very connected and point my thinking in a certain direction. This is the first headline. So the US Treasury will now need to borrow 514 billion this quarter, which is an increase of 320% from its previous estimate. And so the debt that the US is under is just increasing in magnitude all the time. The second headline that I want to bring to your attention is this one, which is one of many, wherein companies are looking to robotic companies to uh, try and uh, try and lower its costs by providing cheap labor and making sure that they have whatever labor they need in the future. UPS, for example, is in talks with startup Figure AI to deploy humanoid robots. So, how are these two things connected? Well, robots are going to cause things to become a lot cheaper. In other words, deflation, because they are going to be a very cheap source of labor that works around the clock, never calls in sick, always has a great attitude, always very productive, and so these robots are going to cause deflation. And when you have a country like the United States under, I think we're like close to 37 trillion now in debt. Um, Deflation is a bad thing because that means it's harder to pay off its debt. So, what the government will have to do is to print money in order to cause inflation, in order to weaken the dollar so that it can pay off its debt more easily. Now, how it goes about um, distributing newly printed dollars, it's tough to say. Perhaps some of the people, some of the workers that were displaced by robots may end up getting, helicopter money, where they're just given something similar to a universal basic income or something like that. But eventually, the government will distribute, I think, money and using various forms, and that's going to cause inflation to balance out the deflation that robots cause. And this is going to cause this printing of money. It's going to put a premium, even bigger than the premium that we're accustomed to, a premium on scarcity, things that are limited in supply. Now, what is something that, its main sort of claim to fame is its limited supply? Well, something like Bitcoin. So Bitcoin is going to skyrocket. Um, Anything that has limited supply, I think, is and has value. Anything or perceived value, anything like that is going to really appreciate in price. So I think there's there's a lot of merit in positioning yourselves in basically two places: leaders in robotics, and then assets that are hard assets, that are scarce, that have limited supply, that can't be manipulated by a group of self interested people. Uh, which brings us to Tesla. And I was asked yesterday about valuations for Tesla, and I wanted to share this. This is from an analyst called Cern Basher. And these numbers, by the way, are discounted to today. So like 7,000 price target for Tesla in 2035. That's 7,000 after the the number, the price in 2035 was discounted at a 14% discount rate to today's dollars. So these are today's dollars, what we're looking at. So um, what without going into the details of his specific evaluation, and perhaps I will in a future live, but what I want to point out here is that if you look at 2025, 2026, 2027, they're the the price target for Teslas is not too far off from where we are right now. So in 2025, 231, 2026, 288, 2027, 604. So we're in the same, ballpark as where we are right now. However, if you go to 2028, 2029, you start talking about 2,000, 3,000, close to 4,000, 2030, close to 5,500. And so you get this S curve, right? So where the valuation goes parabolic at a certain period of time, at a certain point in time. And so the trick here is when you're dealing with a company that, or with a technology that, is on an S curve. Uh, the trick here is to understand that looking just ahead 1 year or behind 1 year is too short sighted. And if you do that, you're going to miss the parabolic phase of the S curve. And now you may be looking at this and saying, "Oh, well, why not just wait till 2027?" Well, the question that you have to ask yourself is, when does the 2028 price start to be embraced by investors? So if you wait till 2027, people might anticipate the 2028 price in 2026 or at the end of 2025. And so you might be, priced out, even if you think that the the fair value today is 231, for example. Even if you think that's the case, investing is a forward looking exercise. So you have to have confidence that the rest of the market is going to price the stock based on 2025 numbers, not 2028 numbers, and hope that that holds true until actually 2028 rolls around. So so that's the point here with regards to Tesla and why we're invested in it today, as opposed to waiting till the parabolic phase in the S curve as we see it. And uh, because you know you can really never anticipate when investors are going to start pricing that in and incorporating that in to their calculations and into their reasoning for holding the stock. So I think we're doing things right with PIF, and that we are building our position gradually. We haven't built it to our target, which, as I mentioned, was 300 shares. Yet we're making progress on it all the time, taking advantage of dips. I think that's the right approach. But waiting till 2028 or 2027 or whenever the parabolic phase in cash flows comes, I think you'll probably end up being too late. So with that being said, let's go to questions very quickly. Discord link is for PIF members. It is a private community. If you'd like to become a PIF member, check out the link in the description. Salam, brother. Gold predictions. I think that gold will continue to do well. As I mentioned in this live, I kind of laid out an argument for hard assets. Gold is definitely a hard asset, but I think Bitcoin will do better. Been hearing people say it won't go any higher. I think that's wrong. I think it will go higher. Harun says, Assalamu alaikum. I like the new streaming time. Great. Leave a like if you like it. Hamad Saad says, Salam. Good call. Thank you. I appreciate that. I hope you're enjoying the profits. Thoughts on Mara? Seeing lots of chatter related to the stock as a must have. Well, I actually think its valuation is kind of attractive, considering its Bitcoin holdings. But I don't like their reliance on debt. I don't really look at Mara anymore as a Bitcoin miner because it's kind of, uh, become more of a MicroStrategy like company in terms of their strategy. So I just, keep that in mind. But I think that they're cheaply valued, but I'm not comfortable with the fact that their business model seems to rely on debt, interest bearing debt. All right. So with that being said, thank you all for tuning in. I gotta run. Leave a like, become a PIF member if you haven't already. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.